Hello and welcome to today's trade of the day. So I'm creating this video series for you guys to show you the trades that we're taking here at AwakeFX with myself and my group. This trade was today, the 25th of June. It's the European session on the Nasdaq. Now, more importantly, what I'm going to teach you in this trading example is draw on liquidity. What is the draw on liquidity? That means, where is price going? Where is price's destination? If you know the destination where price wants to get to, then you can position yourself into a trade and trade in that direction, okay? So we're going to speak about Fibonacci, draw on liquidity, and a few other things in this video. So without further ado, let's take a look at today's trade of the day. Okay guys, so just to begin here, right, what are we looking at? We're looking at a 15-minute Nasdaq chart, and I'm in bar replay mode here, and this is the start of the European session today, which for me is 3 a.m. New York time, which is 8 a.m. here in Ireland and the UK. And usually I'm watching the markets between that 3 a.m. and 5 a.m. New York time. So this is what the markets looked like at 7:30 a.m. this morning, you know, and you can kind of see prices kind of just really kind of all over the place here, would you say? It's kind of moving kind of sideways a little bit all over the place. But there's a few key things here to notice. This is a 15-minute chart. All analysis for me starts in the weekly, then the daily, then I jump down to the 15-minute chart and all of that. And just to simplify this, let's jump to the daily chart for a moment. So this is the daily chart, guys, and look how bullish it was over the last 2 days. We had this move literally from Monday here. We moved up, huge bullish candle, a second big bullish candle up here, and there was a strong push. So we're very, very bullish the US equity markets. I had one level marked up here this morning, which was the high of yesterday's candle, high of yesterday's daily candle. And this morning, prior to the European Open, we had not touched that level. So back to the 15-minute chart. So what key level do we have? We have a key level above us, this daily high. This is yesterday's high. The previous daily high is above us here, okay? And technically the open for the European session is 3 a.m. New York time, which is this vertical line, or 8 a.m. here in Ireland and the UK. So when I have a bias overall from the daily chart that we're in for potentially higher prices, the draw on liquidity, or the location where I expect price to be a potential magnet in this uptrend, would be this previous daily high. That will be the potential magnet for price, this previous daily high up here, okay? A lot of orders rest above daily highs and lows, okay? That's something to be aware of. It's not rocket science. It is a fact that a lot of orders tend to sit above highs and lows, especially daily highs and daily low levels. So price was moving kind of sideways here. The market was gonna kind of open here. What am I looking for? Well, number one is, I believe the price is going to potentially get up to this daily high, but it doesn't have to just rally from where it is right now. It may rally, it may move lower and then rally, or it could move very low, much lower than rally, or it could literally just rally from where it is right now and move higher. I need to find a location on the chart to trade from. As you know, if you've been following my material here on YouTube, I do use Fibonacci retracements a lot. I was particularly interested in this swing low right here. And with that low, price ran up to this high. So that was the highest point here. I had a bit of a pullback. Then we ran up to this high here. So I was interested in measuring a Fibonacci retracement. And the measurement would be from this low down here to the highest point on the right, whether it be here or here. So let's measure that up. So we pull our Fibonacci tool from the swing low down here to this high. Was that the highest high? No, this was the higher high over here to the right. So I anchored my Fibonacci level from the swing low to swing high over here. If you followed some of my videos on Fibonacci retracements, you will know that when Fibonacci swings, or when markets move from a swing low to a swing high, we can often have pullbacks to this 50% to 62% zone. And if we do, and if we get a turn in that area, there's a very high probability the price is going to run towards this previous high and even onto a final destination of the negative 22% extension, which is this red line up here. And today, this Fibonacci plot coincidentally, or is it a coincidence, aligned with the previous daily high, this negative 22% extension. So that was two potential reasons why there was a strong magnet up here, in my opinion, as well. So above us, we had a previous daily high and this negative 22% extension, if price were to get down here. So I alerted my community, in my community that I have here, the AwakeFX Traders community. And in the AwakeFX Traders community, I'm over here on the left in the European commentary, I comment in here to my students about what I'm looking for. And I posted my NQ chart in here this morning saying, okay, this is an area we could be looking for a potential bounce for a move higher. Now there is more notation on the chart here, so I've simplified it here. Right here. So I was hunting price to potentially move lower into a nice location that I could potentially take a long trade and then target this magnet, or what we call draw on liquidity. You may hear that mentioned a lot in various trading groups, the draw on liquidity. What is the draw? What is the location where price wants to draw towards? So we move forward. What happened here? The market kind of opened and price came down lower. Okay, it came down lower here. And we came pretty close to that 50% level. Okay, it looks like we got a bit of a bounce there, but we didn't quite touch it. And I'm very particular. I want these levels to touch. I don't take these front runs or anything like that. I want to see the price touch in the area, potentially turn, look for a long trade, hunt the highs. We zoom down to, let's say, a 5-minute chart. We can kind of have a look at this in a bit more detail. The final draw on liquidity would be above, but I'm not going to buy here with the hope the price is going to move up there. I want to get the best possible price in here, okay? And this is the Fibonacci retracement here on this 5-minute chart. Are you with me? Yes, Shane, I am with you. Brilliant. Okay, so what's the area? I'm still looking for this area down here. Still looking for this area down here to be touched, okay? There's also a previous low here as well, where price kind of came very close, okay? That could potentially be used as a manipulation location. And then price goes to where we want it to go. I was willing to let this trade go. If price moved higher from where it is right now, and I kept on rocking on up here, no trade for me today. I want the A+ setups, okay? And that's what we hunt for in the AwakeFX trading community. For more information on that, check out the link in the description, ladies and gentlemen. So what happened? So we watched this chart here, we moved forward. It kind of hovered around here for a little while, to be honest. But boom. We got the touch. We got the touch. We got the touch. We also took out this previous low, a little swing low here. So anyone who got into potential long trades here with stop losses below this low would have been stopped out on this. Okay, that's why I always wait for the best possible dip in. I want to see the market dip in here. Now there was another few things on the chart there. There was, let's say, there was a 5-minute bullish fair value gap over here on the left where price had dipped into, and we got a nice close above that area. That there could be enough just to enter right there on the long trade. Do you need a large stop on this? Well, normally I would have a 30-point stop, 60-point target, but doesn't that look ridiculous? Okay, so for this trade, I had a 20-point stop, and my target was determined by the chart. My target is previous daily high, or just before the previous daily high, because that is the draw on liquidity. That's where I expect price to be a magnet. That's where I expect price to go to, should this hold here. So one option was to get in here. I'm not going to go into the exact details of the exact options to get into the trade. I do discuss that on my market mastery program. But looking around this area, anywhere from the close of that candle, we move forward here. There was another strong move higher. There was a turn here, 1, 2, 3. We had, so on these 3 5-minute candles, there was a low, a lower low, higher low to the right. I had a bullish candle there, you know. Entry anywhere around that area is good enough. We can see the reaction. We can see this wick down. We can see the nice close above that 50% level. We can see this 5-minute fair value gap holding. It's all systems go. So let's see what happened. We move forward. Price lifted up from that area. Did come back and retest that 50% level again. Did retest. That's why you need to have a stop in a reasonable location. Another pullback here on this candle, another dip and retest as well. But notice where the price is closing. The price is closing on these candles always above this 50% level. Okay, the wicks are doing the damage. The bodies are telling the story. I don't like to have a stop loss really close to a low of a candle like this, in case a further or subsequent candle maybe dips in. So I was comfortable enough to have a 20 pip stop on this and then let price run. We move forward. Price got up and took out this previous high here. That's the first low-hanging fruit, let's say, objective. You know, getting in here and getting out here. That's nothing wrong with that as a target. But the draw on liquidity is higher. This previous daily high here. Moving forward here, boom. Price hits that level. I had a take profit order to exit my trade just before that high. I was out of the trade on the max stretch up here. So that push up here, to that point, I'm out. But look at the reaction. Remember, there's a lot of orders sitting above all highs and lows, especially all daily highs and lows or weekly highs and lows. I'm getting out there before them orders trigger at the draw on liquidity. Other traders may be trying to hold for a breakout or a continuation higher. No, get the low-hanging fruit, get in, get out, and be done with the trade. You know, because if you don't get out at your logical, predetermined exit, what can happen? You can get a full retracement back. You know, full retracement back to break even. And that can happen to a lot of traders. A very frustrating scenario. So today, that was the trade of the day. In, out, done. Once price is kind of moving a little bit higher here, of course, yes, move your stop loss, protect your capital as price is kind of moving in your direction up here. But that was the trade of the day, ladies and gentlemen, using Fibonacci, using fair value gaps, using a predetermined draw on liquidity, having take profit orders to execute prior to your liquidity is taken. You know, if you do enjoy trading, if you do want to join the AwakeFX community, check out the link in the description. Thanks for watching, and until the next one, bye for now.